The stock market looks healthy, but with the debt ceiling crisis looming in Congress, what could possibly go wrong? As you'll see when we get into the numbers, the equity markets have performed very well so far this year. And after a flat to slightly up week this past week, most of our metrics are showing a healthy appetite for risk exposure. So what are we seeing now in the equity, bond, gold, and crypto markets? Well, let's take a look. So if we look back over the past week at the equity markets, you can see that the NASDAQ 100, this bluish green line, and ARK Innovation, the purple line, both finished the week higher, but everything else finished the week lower. So the S&P, the Dow, and small caps all finished the week lower. But the highest risk stocks, ARK Innovation and NASDAQ, finished higher. This is good. This is a healthy appetite for risk. We'd like to see them all higher, but the fact that the higher risk ones finished at the top, that looks good. But what about over the past month? Well, over the past month, you can see the NASDAQ leading the way higher here, but everything else finishing lower. So this looks a little bit tentative. And if we look back year to date, this looks great. I mean, you've got ARK and the NASDAQ 1 and 2, S&P 3rd, and small caps and Dow finishing last. This is a healthy relationship for a rally coming out of a very bad year. So this looks great. And what about the current equity dynamics, or the bottom analysis, as I like to call it? Well, if we look at this, there's really not a whole lot to see here. The confidence level is rising. The risk confidence level is rising. This is good. But we also have a bottom forming indicator rising as well, which is not good. But then on the other hand, the safety confidence level is falling. And if you look back here, the safety confidence level was high as the market was dropping, and then the safety confidence level dropped and the market took off and headed higher. Well, look where we are right now. Safety confidence is really low here. So if I had to hazard a guess, it looks like we're going to go higher from here, but there's no way to tell. Everything else looks good though. And what about risk versus opportunity? Well, if we look at this looks fabulous. I mean, we have the risk acceleration down here at 6. That's crazy low. We have the risk level, this orange-red line here is, where is it? It's just above 60, so this is nothing to worry about. And the opportunity level is fairly high, in the high 60s here, but it is moving downward slightly. So this overall looks pretty good. And if we look at equity versus safety, you can see here that the NASDAQ 100 started out here about 3 weeks ago in 5th place and then moved right up to 1st place, which is where it has stayed for the last 2 or 3 weeks or so. So this looks very healthy. This is a great looking picture. But what gives me some concern here is if we look at cash, cash was in 4th place, moved sideways in 4th place, and then moved up to 2nd place and has stayed in 2nd place. You don't want to see cash up here near the top of this ranking chart, and you certainly don't want to see treasuries near the top of this ranking chart. This gives me some concern. So we've got the NASDAQ 100 up here, ranked number 1. This is great. These are the highest risk equities in this basket here. But then you've got the S&P 500, small caps, and the Dow all down here at the bottom, with treasuries and gold up here sort of toward the top half. This looks like a flight to safety and a flight to risk. Kind of confusing, isn't it? It's confusing me. And what do we see in the buying and selling pressure? Well, if we look at the Dow Jones Industrial Average, at first glance, this doesn't look so good. So you can see that it's been declining overall. And the selling pressure, this orange line, the solid orange line, is shooting higher here. So this doesn't look very good. But you can't really look at this just by itself. So let's see what's going on with the S&P 500, the NASDAQ 100 small caps, and ARK to see what the real picture is here. So if we look at the S&P 500, it's moving more sideways than down. So the Dow was moving down, S&P 500 moving kind of sideways here. But you can see the buying pressure is moving higher and is above the selling pressure. So not terrible. But when we look at the NASDAQ 100, instead of moving sideways or down, the NASDAQ 100 is moving higher. So investors are putting their money in higher risk indices like the NASDAQ 100, and you can see that in the buying pressure. The buying pressure is just shooting up here. This looks really, really good. And small caps, we haven't been able to get a good tell out of small caps for a while. If you look at the buying and selling pressure, they're just sort of noodling here at very, very low levels, no commitment. The index went up and then has been going down. It's really not moving much at all. So not much to see here. I don't read a lot into this actually. But then when we look at ARK Innovation, you can see that it pulled back here and then just shot straight up. And you can see the buying pressure, this gray line, is well above the selling pressure. In fact, the selling pressure has collapsed to zero. So this looks very, very healthy for ARK Innovation right now. All of this combined kind of gives me mostly a feeling that we could move higher, but then you've got the debt ceiling out there sort of looming in the background. So it may make things wonky for a while until we get past that. And what if we look at the sector rankings? These give us a very good indication of, how things are looking in terms of risk appetite versus safety. And right now, so what you're looking at here, this top list is the sector ranking from last week, a week ago. And the bottom half here, these are the sector ranks for this week, for today, this Friday. And you can see a week ago we had Bitcoin, technology, gold was up here, consumer discretionary, ARK Innovation up here. This looks very healthy except for the fact that gold is up here and cash is sort of near the top half, but not quite. So very healthy appetite for risk here. And where are we this week? Well, if we look at this week, we have Bitcoin, a risk asset, technology, ARK Innovation up here. This is great. Semiconductor index up here, consumer discretionary here, gold has pulled back, cash has pulled back. This looks very, very healthy. I like what I see here. And what if we look at the sector rank acceleration? Now these tend to move more quickly. So where were we last week? Well, ARK was ranked number 1. We had emerging markets, technology, emerging companies, and consumer discretionary, and cash way down here. This looks great. And gold at the bottom. Loving this. This looks very, very healthy. Well, where are we this week? Well, this week, again, ARK at the top. Great. We've got 20-year Treasury, so Treasuries are starting to make a move to become healthier here. We have technology, the NASDAQ 100, emerging markets, emerging companies, consumer discretionary moved up a little bit here. And you can see that cash is still holding down here where I'd like it to stay, and gold is at the bottom. This looks like a very healthy appetite for risk. Nothing to worry about here except the debt ceiling crisis. And what about Treasuries? Well, they tried to rally this week and actually ended up the week positive with the riskiest Treasuries, the longest duration Treasuries, up the most, followed by the 20-year Treasuries up second most, and so on. So while this is declining over the past couple of days, the net result for the week was fairly positive for Treasuries. And if Congress doesn't resolve the debt ceiling, what you're most likely going to see is you'll see a flight to safety, but it won't be short-term Treasuries that people are moving their money to. It will be sort of intermediate to longer Treasuries, because the feeling will be those Treasuries won't come due for quite a while, and that'll give Congress time to figure this out and get out of the way. But if people start dumping equities, they got to put their money somewhere, And where they're going to put it is probably in intermediate to longer treasuries. That's exactly what happened in 2011 during the debt ceiling crisis. Now, I'm not saying that's going to happen here because you can't play this that way. It never works out the way it did before, but that could happen. That's all I'm saying. And how about that inverted yield curve? Yep. Well, it was getting better back here. It was less inverted, and then it became more inverted over the last couple of days. So this still has a long way to unwind. It's really going to take the Fed lowering rates or for long-term rates to go up by a lot. And how about the buying and selling pressure for treasuries? Well, if we look at intermediate, 3 to 7 year intermediate treasuries, you can see we've had a very nice rally here, but the buying pressure is falling here and in fact collapsing, and the selling pressure, the solid orange line, is rising. So this doesn't look good. What about what I call intermediate to long treasuries, 7 to 10 year duration? Well, you can see this doesn't look very good either. We had a big peak in selling pressure here as the price of these bottomed. Now they've been in a nice rally, but I don't like the fact that the selling pressure is increasing and is above the buying pressure. And for 20-year long bonds, not much price action here. You can see this is pretty much sideways here over this entire period. And yeah, there was a big peak in selling pressure back here as these bottomed out, and then it's just been kind of nowhere. A big nothing burger here. The selling and buying pressure just kind of trading places back and forth. So really not much sense of direction for the long bonds. And for gold, well, gold, kind of again, sideways to maybe slightly up, but look at the selling pressure, just shooting straight up here. So this doesn't look like it's good for gold going forward. And Bitcoin has really been struggling. You can see that. We had a rally here, and now we've had a decline. In fact, a fairly steep decline over the last several days. And you can see that here in the selling pressure, which is shooting up and is well above the buying pressure. So right now, Bitcoin doesn't look like it's going anywhere good soon.
Say that I'm fine till I burn out.
If we look over longer term time frames like year to date, the equity markets continue to look healthy. And in the shorter term, they appear to be a little tentative. As I said at the beginning, with the current positioning going on in Congress right now over raising the debt ceiling, there could be turmoil in the markets ahead. But for now, the metrics are looking mostly good, with some indicators that are causing us to be cautious looking forward during the next few weeks. The debt ceiling's the big wild card over the next several weeks, and it's scaring many investors. But we're staying long in our investment bias for right now. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.